Hi, good afternoon, Futex traders, and welcome to an FX and commodities stream on Monday, the 8th of February. What we'll be looking at today is a couple of things. Firstly, the gold and gold miners. Before we touch on that, we'll be looking at our regular FX rebasing chart. Then we'll be looking at the gold and gold miners. We'll then be looking at an interesting pattern that's a very similar pattern to the structure of euro, to what oil looked like. So just a comparative pattern analysis and how we could use the oil structure and the oil chart that happened a good couple of months ago in possibly determining where the next leg in the euro is. Then we'll be finishing off by looking at something with regards to a trader's journey along his loss and profit cycle, and specifically looking at the J curve of learning. And we'll be looking at that and just something that I've observed, something that I've spoken to and seen traders, whether it be myself or other traders that I've been associated with or mentored, of their learning curve and what to expect along your journey of becoming a consistently profitable trader. We'll be touching that just on the end. So I'm going to be going through the charts fairly briskly, and then we'll be really focusing on what my main topic, more or less on psychology and routine of a trader to becoming a consistently profitable trader, and just planting a seed for you guys out there, and for you guys to really have this awareness about yourself further down the road. Okay, so since Friday, this is our FX rebasing, and we've had the key underperformer for today from Friday's close till currently at the moment, just after 12 p.m. UK time. We have the deep underperformer against the US dollar, 0.6% down is the British pound. And then we have the euro, just slightly down against the dollar, followed by the Canadian dollar, and then the key outperformer being the Australian dollar. Then we have the Japanese yen. Now we have had some risk-off flows, and this is really interesting. We're not having the FX market really biting with the moves in the equity markets. And sometimes when you get this displacement, so you've had some fairly aggressive bond moves, some aggressive equity moves, but the currencies haven't really been reacting. Traditional risk-off currency flows. So that to me gives me a first little hint of keeping an eye on the Australian dollar. So I'm keeping, the Australian dollar is up. Traditionally over the past year and a bit, your so-called commodity currencies, when you get equities getting hit and bonds going up, you'd get your general commodity currencies being the underperformers. So I'm going to look at the chart and keep an eye. Is there some deeper sense of accumulation going on in the Australian dollar or potential profit taking? And we'll briefly look at the chart in that space, because that's just for me when I do comparative analysis of relative asset class flows. You should expect one thing, but you don't get that. And when you don't get that, sometimes there's an underlying theme that's going on. And we'll have a look at this Australian dollar, and we'll try and keep an eye on it and possible trade plays over the next today and over the next week or so. Now, what I wanted to show now, at the end of last year, I did a special stream on gold and gold miners, and the stream was really looking at, so I did it on around December, I think the 11th or 7th of last year. We're looking, and we're trading around down here, around the 1080 level in gold, and we're looking for a fairly powerful move in 2016, and we're looking for a powerful move to the degree of 40% for 2016. We've now actually moved since that stream around 8 to 9% in gold. And what I wanted to flag to you, two things. Well, firstly, we've pierced through quite confidently the 200-day moving average, but I'm not really putting much credence on this 200-day moving average, simply because we've been in this downward sloping wedge formation. And when you kind of been caught in a range, your moving average and your oscillators start becoming unimportant. They're more powerful and important when the market has been trending and when it touches the first time. So again, knowing when to use your tools, where and when. Now, wanted to flag to you, this is downward sloping trend line over here in gold. So that's going to be the first area of key overhead resistance. And I really want to see, and we've got the corresponding swing high over here in gold. So if I just look at Actually, let's draw this for you. So we have this key swing high over here, and then we have this downward sloping trend line over here. So this trend line that's been coming out 1, 2, 3 touches. This will potentially be the 4th touch, and you can see it's a downward sloping wedge. And downward sloping wedge formations, when they beat to upside, have bullish implications. You know, that's the nature of a downward sloping wedge. So if you're younger traders, just Google downward sloping wedge, and you'll see the implications of that pattern is has bullish implications. Now, if we do breach this downward sloping trend, downward sloping wedge, how I like to do the measured target is just taking the widest part of the wedge formation, so pretty much the start of the wedge, and I project this area. So I take the height of this and I project it at the breakout point, and you'll get the 100% projection, and the first target would be the 61.8% projection. Okay, so just keep an eye on gold, and if you want to have a look back at that, the reason why I was looking for a big gold move in 2016, look at my December 7th or December 11th stream in the Futex Live archive section of the FX and commodity stream. And then corresponding to that, if we look at the gold miners, so again, we were looking at when we were trading around here on the back end of December, we were saying that the most ideal scenario for this falling wedge formation is maybe a touch of this downward sloping trend, a potential breach, and then a snap back inside here for a powerful move to the upside. We haven't had that. We've actually just straight line and beelined for the upside as gold has recovered. So we've broken this trend channel, and this is the GDX ETF, so this gold miners ETF. So first area of key support now will be if the market, in a weekly time scale opens and holds above this this downward sloping trend channel that you can see. So we want to see if we should have some strong support now as the market tries to target these previous swing highs over here in the gold complex. So those are the gold, and just wanted to rehash what we're looking at the back end of last year. So now, next thing I wanted to do is a quick little quiz and a quick little test for you guys, kind of spot the difference. So I want to ask you, and you'll probably be able to make out if you look at the price of these charts. If you look at this chart over here, okay, now this market, which I'll draw, so we had this powerful up move, we had a very sideways consolidative move over here. We then breached towards the upside, and this was after a significant down move. Okay, so this was the oil market. So just look at this pattern, and look at this structure, this technical structure that you can see in this downtrend that we have in this market. Now, if I go further down and I show you another chart, you can effectively see the exact same pattern. Two different markets, but the exact same pattern. So here is the one market, and here is a different market, downtrend, as you can see by my mouse. So so we have this downtrend followed by this very fast, aggressive, profit-taking move, sideways action, market moves to the upside. So what are these two respective markets? Well, the first one over here is oil. So when oil made a low, the first one, I had it the wrong way around. So this one over here is oil, when it went from 37 bucks all the way up to 50 bucks, consolidated in this range for a good over a month. We breached towards the upside. Now let's have a look. Just exactly that structure over here. And if we look at, let's go have a look at the oil market. So let's just clear this up now for you. So if we go look at, and actually let me bring up the oil markets on a separate chart. So when I was showing you that pattern, that was this pattern over here. So this is oil. We had that breach up over here, and then, so we had this sideways move, we had a breach towards the upside, a failed break, failed ups, and you get a lot of failed breaks when you have downtrends. You know, that's one of the key characteristics of downtrends. The bullish patterns generally fail. Bullish patterns in small time frame against the backdrop of a longer time frame usually fail. So if you've worked out the trend of a day, even an intraday basis, if you've been, you know, say for example, the equity markets are sold off most of the day, and we have a, you know, we have a bounce, and say we have a flag formation, but because the general theme has been down on the day, we have this flag, breaches towards the upside, fails it, then it can come back down. Now look what happened over here. So came back, and effectively we have just gone south after this very powerful up move. We also had this move pretty much in the 10-year German bonds, where we had this powerful move from last year, sideways action for most of the year, and then we've come back down, except this here in oil just breached up first before we sold off. So let's have a look now at, well, let's have a look now at the euro. So having this pattern in mind, let's quickly have a look at the euro now. So we go back here, and we look at the euro, and actually let's bring up a clean chart again. Let me show the euro. And look, this down move followed by the sideways action. We're in this stage over here when oil was at $50. So just be aware, if we fail to advance much higher than the 112.50, and we start selling and we start coming back in this range, and we do have the ECB key event risk in March, and we do come back below here, well, the implication is then we can sell off very, very nicely and very aggressively. So to me, we are now in the euro at a key pivotal area with reference to a shape of a bullish type of structure. So this powerful move up here, consolidated with sideways action, move stops out anyone who's looking for some ECB action before potentially the resumption of the downtrend. So just keep a very, very close eye on a pattern that looked very similar in the oil market. Okay, so I just wanted to show you that. Then let's quickly have a look at the Australian dollar possible play. So we're looking at the Australian dollar. Now we currently have an inside day as we stand. Now the day hasn't finished, so it's not an inside day until the day is complete. But we haven't had the weakness that one would expect on the back of the equity move. So maybe that will play some catch up. So really tomorrow is going to be a very key. Now once China come back, so we want to see, you know, it is a Chinese holiday, so that's why you got some subdued Aussie trading. But tomorrow is going to be quite key if we stay with this inside day. If we breach the 73 back to the upside, we could have a very powerful move towards the upside. Or if we breach whatever the downside low is today, then you can have an equal move to the downside. But if we really continue on an equity weakness today, and somehow the Aussie holds itself, and if we get a little bit of risk on tomorrow, I expect a fairly explosive move towards the upside. So if we have a subdued market tomorrow, just keep an eye. Now remember, a play and a pattern does not come to fruition until it executes your certain buy zone. So for me, you know, the buy zone will already be, you know, the high of today and the high of tomorrow. Hopefully this high of today stays intact. And if we have some equity, you know, equity holding itself tomorrow, and we somehow do find a bid in the Aussie, then just keep an eye on a potential strong play towards the upside. But conversely, you know, just have your wits about you if we just continue to move south, which is our longer term expectation. The longer term expectation is to potentially visit this swing low at 60 cents to the US dollar. Now, let's have a look at a special analysis on a trader's profit profile along his journey. And it's going to be a very simple graph, and it's something I've observed. You know, spoken to a couple of traders this past month, and this is mainly for traders who've been in the game, you know, for you know above 2 years, you know, 2 years and more, 2 to 3, 4 years even. And it's this chart, and that I want to show you. So if we plot, hopefully, okay, if you can't see that, let's actually use a black line. So if this is your P&L, and over here is time. So those are your axes. Okay. Now, what we've heard is the classical curve of trader performance and learning is called the J curve. Okay, so the J curve, as the name suggests, looks like a J curve, and that's your traditional performance. And say it takes about 1 to 2 years, to say for argument's sake, about 12 months. Okay, so in the beginning of your career, and this being 0, so beginning of your career, you have immediate losses as you start learning your new skill set in the financial markets. You start discovering certain setups, certain plays, understanding yourself, and how you're going to embark in your career as, with the goal of becoming a consistently profitable trader. Now, this is a pattern I've seen happen so many times for so many years, and it all has to do with psychology of a trader. And if you look over here, okay, you don't really get this perfect J curve. Rarely do you get a perfect J curve. Now, the function of a good J curve really is if a trader is developing along his journey and he's putting all the great routines, he's journalizing his trades, executing his plan, and he's really learning about his own ability, enhancing his skill set, and maintaining a rigorous routine. If this trader maintains all those certain criteria of, most importantly, his routine and his ability to execute his plan, and then his ability to review his plan and put in the appropriate implementation procedures to continually improve, well, then it could look like this. As he starts discovering himself in the markets, you could have this nice trajectory of making profits along along your entire lifetime as being a trader. But what I've observed a lot is traders in this quadrant over here, when they're learning and developing, it's such a struggle. It's a struggle to financially support yourself. It's a struggle with, say, family and friends wondering what you're doing and, not making any money. So in this area over here, but once you breach this area, you've kind of mastered a routine. You've kind of mastered an approach, an awareness about yourself to becoming to become a consistently profitable trader. And what happens is when you hit, say, this point in time over here, for argument's sake, what you see is for the first time a trader is making money. And it's the first time a trader can take draws potentially on his account and can start living more of a life where maybe it has a few more dinners in the evening, goes on a few more traveling trips. And this period over here, a lot of the times you see a breakdown in a trader's routine. He's forgotten what got him. This whole area of developing skill set, but a lot of time over here, as he's developing, he's making money, still strong routine, but then all of a sudden, he has a couple more later nights during the week because he's got a little bit more spare change and more bob to go out and spend it. And then all of a sudden his routine and his method of preparation and his methodology and his framework and his debriefs start suffering a bit. And as a result of that, he starts becoming disjointed from the market. And then what happens is that he could still be going up, but the trajectory of the curve is less and less. And then all of a sudden you see this. And because he's got this money that he's made, but his routine has changed. What got him there is now changing quite significantly because his lifestyle has changed. And I've seen this pattern so many times where you see a trader eventually work out the market, eventually find himself in the market. But then instead of continuing, and this black line here is the nature of him continuing and continually grow and advance in his skill set. But over here, when a trader's gotten to this stage, he somehow starts veering off. And so you have two choices. The trader either starts cursing because he remembers how hard this was, has kind of given up and just think trading is not for him, and then can just continue towards the downside. Or the trader has learnt what did get him there, goes back to his former routine, and from here at this point can really start progressing along his career. And this is kind of the choice where I see a lot of traders who, from year 2 to year 4, to kind of need to decide, the lifestyle and the routine that got them to this area. are they maintaining that form of excellence? Because there's all these other new entrants in the market, all these other new traders who are willing to work as hard. And if you're not willing to work as hard as you did in this beginning stage of a career, when you started launching over here on your P&L curve in reference to time, then you can have a significant drop off. And it's at this inflection point of saying, I'm going to, I've got the experience. I remembered how I approached my level. Whereas I wasn't drinking during this period of my career. I stopped drinking. I started focusing on my sport, on my, I was meditating. I used to do proper debriefs at the end of the day, and then you could have a very powerful up move. And I've seen this a lot with traders, because I think all young traders, you've worked so hard. You've been living below the breadline, lentils and rice for all of this career, or the cheap macadis, and all of a sudden you find something, and then you start going to a couple of nice dinners, Gordon Ramsay nights out, or a couple of late nights on a Wednesday night, and eventually the routine becomes unhinged. So please just remember, for the guys who are in this stage of their career, who are just starting to make money, and once you start making a certain amount of money and you get that new those new couple of pounds in your wallet, just remember to maintain the discipline and the routine and your approach to the markets like you did when you just started breaching the ground zero level. Okay, so I just wanted to go through that with an observation that I've seen with a lot of traders, not your new traders, but traders who have found a path of making money, and then how do they get to that next level. Okay, so this is Alex Hayward for Futex Live, and good luck for the rest of the week.